Hi viewers, this is Muhammad Zahid Imtiaz, and the topic of my presentation is raising corporate finance. It's a basic level presentation, and it will act as a checklist for the finance professionals while they are getting ready, while they are gathering in-house information. The agenda of my presentation is that we'll discuss about the nature and history of the business which we are representing, cash operating cycle, purchase, processing, and sales cycles. After that, we'll also have a discussion about the existing facilities and their debt governance, limiting factors, and some financial information which uh, we should know. The first slide is nature and history of the business. For example, if I'm representing an organization, I should know that when this organization was formed and who are the principal owners of the business as per legal documents, when the trade license is going to get expired, and what are the related party implications and related party transactions which are impacting the business. I have to also know the number of employees, including a segregation of the office staff and production hall staff. Nature of products should be under control, should be very much known. Even if, for example, uh, as a finance person, you don't know about your product, it's better that you consult with a technical guy to get a guideline on this particular matter because it's very important. We will be asked about the production capacity and the number of storage locations of our business, and top line and bottom line figures are also critical questions which will come across. The next thing in our agenda is cash operating cycle. We should know the cash operating cycle of our business. Basically, it's a length of time between the organization's purchase of an inventory item and recovery of cash from accounts receivable against the sale of the same item. It is also called cash conversion cycle, asset conversion cycle, net operating cycle. The formula for the calculation is also given for your reference. So now here comes the purchase cycle. Bankers or the representatives of the financial institutions will be keen to know about which markets we are purchasing from, whether it's a local purchase, whether it's international, and number of countries uh, sh- should be listed for this purpose. What payment terms are there for our suppliers? Maybe we are doing a business on advance payment basis if LCs are involved, or partial advance or restaurant delivery. So the proportion of all the purchases, segregating the same into the payment terms is very important. Then we should have a clue about shipment and delivery mechanism. For example, there could be direct loading from our supplier to customer. It's a third port model, or X warehouse model could be there, or CIP terms can also be there. So whatever payment terms or whatever the shipment and delivery terms are there, we should have an idea, and an approximate percentage of all the mechanisms should also be clear. And top 10 suppliers, yes, every banker will ask you this question, the top 10 suppliers and their geographical dispersion, and time of delivery and related transit times. For example, if we are importing goods, what transit times are involved between the loading port and the destination port, because this information will have a direct influence on the cash operating cycle. So we should know about this information. And there has to be a calculation of the average credit days as well. Sorry, I mean average creditors days. Then comes the processing cycle. Actually, this deals with your production hall. For example, there may be goods which will come in your warehouse and will be repacked after unpacking immediately for delivery, or there may be goods which require a fair amount of time to get processed. So, time span depends on the nature of business. So, whatever business we are in, we should have a fair amount of knowledge about our processing cycle. Technical side of processing should also be available with us in a documented way. And we should also be aware about the industry norms in this regard, how much average time in industry is being taken for the processing of the materials which we are dealing with. And then inventory days, it's a simple calculation, should also be there. Then comes the sales cycle. So we should have an idea about which markets we are selling to, whether they are local sales, whether they are international sales, and if they are international sales, how many countries are there, what are the payment terms. They could be current dated tracks, they could be post-dated tracks in the case of local sales. And the payment terms could also be letter of credit based. There are different versions of LC. It could be site, it could be usance, and UPass LC can also be there. Cash against documents is another form of payment term. This can also be there. So whatever payment terms are there, uh, we should have a fair knowledge of the payment terms with the proportion of the business involved. I've just given these for the purpose of example. Whatever your business is dealing, you have to have the knowledge of the same. Banks will definitely ask you this question, that whether open credit exists. It's a term when used, it means that you are selling the goods to the customer without securing your site. For example, you have not even taken some advance from your customer, or you have not even taken some security check from them. If it's a case, then we call it's a pure credit, it's a open credit. Normally, bankers don't like it. And then the proportion of the customers, for example, we should have an idea about the top customers. Normally, banks will ask you about the top 10 customers in UAE. Then comes the sales to related parties. If there are any sales to related parties, you should have the detail and the quantum and the amounts of the same. Future target markets. Yes, what are your future plans? Which markets you're going to target? Banks will be keen to know about it. And markets which are recently added, banks would be interested in this point as well, because they'll give them an idea how good your sales team is. And finally, the debit days, that's also calculated on the basis of the formula, which almost everybody knows if he's a finance professional. So then comes my next slide, that is an overview of the existing facilities. As the information which we should have about the existing facilities of organization and the related debt governance. For example, we should have an idea how many number of banks which we are dealing with, what facilities are there, security or margin, whatever we have given to them. For example, they could be cash margin, or they could be we have given them land as a mortgage, which they are which is there with them as a security. So whatever securities or margins which we have given to banks, we should have a clear about idea about that. And if we have given the personal guarantees or some key man insurance, yes, that also will be inquired by the bankers. And if there are some negotiations which are in process with any other bank, that we should also have a clue about, and we can share this information with the bankers as well. How much finance cost which our organization is bearing as of now? For example, this could be IBOR plus certain percentage, or a minimum percentage can also be there, or some base rate can also be there in some cases. Ancillary costs, yes, it's also very important. Banks earn lots of money through these charges. They could be Examples are GSM charges, LC advising charges, transaction processing charges, and if you have lodged some export document and the discrepancy has come, the discrepancy fee will be charged. So actually, we should discuss about the ancillary costs with the bankers. For example, we are meeting with the ex-banker. We can ask this question that how about the ancillary costs and how about the interest rate? How much we are currently paying and how much they can charge. And then we'll be asked about the expiry date of our existing facility letters with all our banks. And then comes the next slide. Actually, we should also have an idea about what is the limiting factor of our business. In some businesses, there could be a non-financial thing which is indirectly acting as a limiting factor. For example, if it's a luxury business or it's a seasonal business, that can be done within that particular time period when there is a boom for that particular business. Or, for example, capacity, we have a limited capacity. It doesn't matter how much finance we have. Working capital finance, I'm talking as of now, because long term project finance is a different thing that deals with the capacity. So, here our scope is working capital finance to do the business rather than a long term finance for acquisition of a plant and machinery to enhance the capacity. So, for example, we have a limited capacity, and doesn't matter how much working capital finance we have, this will hardly make any difference because we cannot operate beyond the capacity, and obviously sales cannot go beyond that level. So, another aspect is that limiting factor can be financial. For example, there's an organization, they don't have any capacity limitations. The nature of business is such that, for example, they are trading and they are trading from third ports. For example, they are sitting in UAE. They are purchasing goods from say X country and they are selling to Y country, and they don't even need the warehousing facility or any sort of capacity. In that case, obviously, the more finance they're going to have, the more turnover they'll be able to generate, and hence more profit. So, we should be very clear about the aspect that whether our limitation is only finance or non-financial limitations are also there. So, for example, we say that the finance is the only limitation for our growth. In that case, we should also know that how much finance our organization can accommodate, and we should also be able to present the projected financial statements, the projected equity amount after the consideration of the finance which we are looking for. So, my next slide is the financial information which bankers will definitely keen to know from us. These are very small things, I should say. GP ratio, NP ratio, debtor days, inventory days, creditor days. These are already discussed here. Here is the debt to equity ratio. Actually, debt to equity ratio is important because this will give them an idea about how much leverage is available, to what extent they can take the risk with respect to our organization. Then we should have mm, an idea about the fixed overheads of our business. This will also help the bankers to understand the level of risk which is involved. Low fixed overheads means low risk, but obviously the size of the business and the setup and the prestige and the reputation, all these factors are also to be considered. We should also have a summary of non-current assets. This will give them a comfort that okay, we are going to be there in the market. We have a huge setup if our non-current assets are of significant size. And lastly, who are our auditors and what is their rating? And bankers will also ask us straight away the 3 years audited financials and the latest in-house financials as well, and projected financials I have already discussed earlier. So, respected professionals, you can make out a checklist out of all this information once you're up for a meeting with the uh, representatives of the financial institutions. And that is it from my side. In case you have any questions, please do contact me. And most importantly, if you have any suggestions, please do let me know. Thank you very much. Take care.